Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So yesterday's video we talked about my buys and sells for the month of April. We talked about dividends that I've received for the month of April. But in today's video it's slightly different. And this is something that I was doing for myself as usual. And then I thought, you know what, I'm going to share with this with the community, because I wanted to go over all 26 holdings in this portfolio and then see where they are in terms of valuation, where they are in terms of growth side of things. And at the same time, I want to see if some of these companies are doing what I want them to do from day one, basically. What I mean by that is my investment thesis, are they still intact or things have changed and it's time for me to get rid of them? So in this video, I'm going to go over every single one of the companies that I own, and I'm going to tell you whether they're overvalued, undervalued, and what I'm going to do with them, as well as, of course, at the end, I'm going to tell you just generally moving forward what I'm going to do with the entire portfolio, inshallah. As always, if you are enjoying this type of content, like I've always said to you guys, I'm trying to be honest and transparent with you guys. I'm trying to share my journey with you guys, and I genuinely appreciate every single one of you that likes the video, subscribed already to the channel, and now there's some of you that are tuning into every single video that I post every single week. So thank you so much for doing that. It genuinely means the world to me. And as you know, continue doing what you're doing and share it with your family and friends. And if you are new to the channel, you know, my name is Mahmoud, and all I'm trying to do here is just share my journey. I'm not a financial guru or anything like that. What you see right in front of you is actual money that I put in the last 4 years. Some of you have been with me over 3 years and you've seen it grow from, I think it was 20,000 when we first started, to right now over 100,000 in the space of 3 years, whatever it was. And alhamdulillah, I'm grateful for that to Allah subhanahu wa ta'ala, and I'm grateful to all of you for, you know, all the support that you've given me over the last couple of years. So I appreciate that. Let's continue this journey. Let's reach out as many brothers and sisters out there. Again, I'm not trying to say I'm a guru, I know what I'm doing. I'll make mistakes, but I'm going to be honest and transparent with you guys, and that's what I'm going to do today. So I'm going to share with you guys every single holdings, what I'm going to do moving forward. And then, of course, things can easily change, but I will explain when things do change, inshallah. Before we move on, if you can join us on the Patreon account, where you get access to a lot of things, including Discord, where you have genuinely, and I mean it, there's a lot of really wonderful brothers that are sharing good practices on daily basis, okay? And they're sharing their buys and sells, as well as me sharing that with them. And at the same time, we've got the watch lists, you've got the Sharia compliant investing ebook, and then there's the family portfolio, which is on the interactive brokers. I do share that here on the Patreon account, as well as, of course, in the Discord. So if you're enjoying this type of content, just join us. It will cost you about 15p per day. And, you know, I definitely, like I said to you guys before, I really appreciate you guys so much. Now, what are we going to do now is look at every single ticker. We're going to look at the current price. We're going to do a 1 year return. Just the price appreciation. No, I'm not interested in the total return, and I want to see the 5 year return as well. Okay, so this is just based on price, because I want to see where these companies are heading, some of them, where have they been, and then I want to see total return, including dividends as well as price appreciation for the last 10 years for all the companies that I own. Then we will look at whether they're undervalued, overvalued, or fairly valued. Then what am I going to do? Am I going to buy more, sell, or hold? Growth estimate for the next 5 years, we'll talk about that. And then, of course, at the end, I will give you my view of what I'm going to do. Of course, you will know it here, but again, there are some companies that I might have a question mark on, so and I'll share that with you. Now, when we talk about total return, I just want you to bear in mind the S&P 500 have returned 171% in the last 10 years. And this is what I always say to people. One of my very close friends were talking to me the other day, and we're trying to encourage him to start investing in the stock market. And we were talking about, you know, he had a question and said, okay, what if I put £10,000 now? How much would it be worth next year? I said, it could be 5,000 or it could be 15,000, you know, like, but in 10 years from now on, you will basically make sure that, as you know, because the S&P 500 returns 7 to 10%, it will be way higher than where it is right now. That much I know in terms of trajectory of where the S&P 500 has been over the last 20 years. As you can see, 171%. So that means if you bought the S&P 500 holdings, which is not Sharia compliant, by the way, you will be up right now 171% on your investment, which is wonderful to see, rather than the money sitting there in, you know, and inflation eating it away. Okay, so I'm gonna do per sector because I don't want to make the video too long, so I will do a sector and I will summarize the sector. What I mean by sector is the first sector we're looking at is technology. Okay, so I own 4 companies in this technology sector. Inter is one of the companies that I bought more recently in comparison to the other 3. Currently it's just trading $629 per share. For 1 year, it has 43% return, and the 5 years, 156%, which is really good. 156% in the last 5 years, which is good. And then total return in the last 10 years, 820%. But right now, it is very expensive, 26% premium according to Morningstar. And if you add that maybe 5-10% off your margin of safety, then you're looking about basically over 30 something percent, or the 30%, 31 or 36%, depending on what you're looking for. And right now for me is a hold because I think it is quite expensive, so I'm gonna wait. They're expecting the earnings to grow about 14% next 5 years per annum, which is really good. So a company that's up total return in the last 10 years. By the way, this does not tell us exactly what is going to happen in the future. It just kind of gives us an idea where the company has been, and hopefully if they continue to do what they've done in the last basically 5 to 10 years, then hopefully we will actually see a return for our investment rather than just a decline completely. Okay, next one is Broadcom. Broadcom is one of the companies that I started with this portfolio for a very long time. I wish I bought more. I actually trimmed it not long ago, and I did it at the time because I was a bit concerned about where things were heading in terms of especially technology companies. But then since then it's actually gone up way more. But I took some profit off the table, and I'm happy I did that because I bought other companies that has gone up since as well. So right now it's trading 120, let's call it $128, $1,280 per share right now. 1 year return of 115% and 5 years of 326%. And look at the total return in the last 10 years. 2,600% in the last 10 years, which is absolutely ridiculous. It's only 12% premium right now, and is a hold. So if this company comes back down maybe 15%, I'm going to start buying more, because I've waited for quite some time now, and it doesn't seem it's going to come down. It's been going up for a while. They're expecting the earnings to grow about 14%. So if it comes down maybe 12 to 15% or so, then I'll probably start looking again. Qualcomm is changed the game. Like, this company was so undervalued so long. For the last, say, I don't know, 6-7 months, it's just gone up so much. In fact, let me just have a quick look of what they've done in the last 6 months. Okay, 50% up in this last 6 months, and a year to date of 24%, and for the 1 year about 60%. So yeah, it's gone up so much basically in just the last 6 months. 42% for the 1 year, and for the 5 year we're looking at about basically 109%, and total return in the last 10 years we're looking at over 200%, which is really good. For 28% premium right now, definitely a hold for me. 8% expected to grow the earnings in next year. I love the company. I bought, I think, 40 shares. I'll share with you guys, by the way, at the end of the video. I'll go through all the companies and quickly share with you guys the how many I own and so on. So yeah, I'm gonna leave it alone for now. It's definitely a hold for me. ASML is another one that I actually trimmed not long ago. I used to own, I think it was 8 shares or 5 shares. Sorry, 8 shares or 7. I can't remember. I think it was 7, and then I sold 2 or 3. I can't remember now. It's now trading over. It was at one point over $1,000, but right now it's about 900. 44% 1 year return, and then 5 year return of 340. Total return the last 10 years 1,148%. Fairly valued at the moment. Okay, and for me it's still a hold. Okay, for me it's definitely still a hold. And one of the things that worries me a lot is these 3 companies that have done so well, and all of them are in the same sector. What I mean by that is that they are semiconductor companies. So if anything happens to semis, I'm losing quite a bit of money. So that's why I started taking a bit more profit off the table. But it doesn't look like that's going to happen anytime soon. So we'll see what happens. They're very cyclical businesses, so I wouldn't be surprised. Now, the next companies that we're looking at is the consumer staples, and that is Procter & Gamble, RB, and Hershey's. So these 3 companies are, what I would like to call foundational stocks. They don't go up a lot, every single stock in my portfolio has a reason that is there, and these are my foundational stocks. These are my growth companies, okay, the top 4 here, and plus a few more that I'm going to talk about in a second. But these are my foundational stocks. These are the companies that I expected, the consumer staples and the materials and all of them. They're there for to kind of stabilize things because they have a very low beta. Okay, they don't go up a lot, but they do nice dividends, and their cash flow is very predictable. So for that reason, I like to hold them in this portfolio. So PG is one of the companies I've had for quite some time. For the 1 year is up 3%, for the basically 5 years is about 52%, and for the total in the last 10 years, we're looking at 161%. For a company that just sells, you know, just basically normal consumer staples products, it's actually quite nice, 161%. Now 13% premium right now, definitely a hold for me. They expected the earnings to grow about 8%. So if it comes back down to maybe another 15% or down, then I'll probably will start looking at adding a bit more. Next one is RB. This is down so much in the last whatever months. By the way, that's not the current price, that's in pounds, so in pence, sorry. So it's about 44 pounds I think per share right now. For 1 year is down 31%, and the 5-year growth is because the earnings were not great. They kind of guidance was not what great either. So for that reason, they had to basically bring it down, the expectations, and for that reason it's down so much. The last 5 years, 27% down, and the total return the last 10 years to minus 28%. That's absolutely ridiculous. Okay, and this is why I don't like the UK companies, and I'm not just saying generally, they are not good investment at all. When I first buying this, I thought, you know what, let me look into these companies that are based in the UK, that I don't have to pay any dividend taxes and all of that stuff, okay, and they have a nice dividend yield and products that I know and I buy every single week. That was my basically thesis. But look at it, it has not done well at all, but it's 33% discounted right now. So what am I doing? I'm just going to buy and get to at least 100 shares while it's still down, and I'm going to leave it alone. I'm going to give them maybe another year or so, and then I'm going to wait. They're expecting the earnings to grow about 4%, which is absolutely fine. That's what you expect from this company. So hopefully it will bounce back, and if it doesn't, by the time I get to maybe a year or so, I'm going to do exactly what I did with other companies that have not done well. They'll, you know, in terms of moving forward, if the earnings start improving, hopefully the stock will then recover, and the dividends is actually quite nice. So I'm just going to leave it for now. Hershey is another company. So Hershey is one of the companies I've added recently. They've not done well for the 1 year, but the 5 years they've done really well, and for the last 10 years basically 140% in terms of total return, which is nice. 10% discounted right now. So I'm going to continue nibbling, adding just a bit more here and there. I really like this one. In fact, at one point I thought once this bounces back, maybe take that money and split between these two, or even look at another consumer staples. Next sector that we're looking at is one that I really like and don't know much about, to be honest with you. I'll be honest, because these companies are have very difficult basically products to kind of get your head around. But AstraZeneca, J&J, Merck, and Medtronic, all four of them have been in the portfolio for quite some time. AstraZeneca is the newish one. I really like the AstraZeneca, the fact that it's based in the UK. It's done well. 2% for this year, 109% for the last 5 years. Total return 160 in the last 10 years, which is really good, and that includes dividends and so on. Fairly valued right now. It's a hold because I feel like basically healthcare, I've bought so much in the, especially with this one, I've been buying for quite some time. So if it comes back down again, I might start buying a little bit more, but expect it to grow earnings about 13%, which is nice. This one is the one I had question mark on, but I'm gonna leave it alone. So for 1 year is down a lot. For the 5 years is only 3%, but the last 10 years is about 93%. This is one of the companies that are very similar to this consumer staples. If it bounces back and I'm in the green and there are better opportunities out there, I wouldn't mind selling J&J. Because I do have consumer staples already, there's no point. Because remember, they used to have a consumer staples section that they've now, the Kenview bit, they've now spun that off. So for that reason, it's now pharma company. So for that reason, if there are other pharmaceutical companies out there that are doing better, then I wouldn't mind selling it. As much as I like the company, I wouldn't mind selling it. Merck, I'm not going to touch it. I'm not going to add to it. I'm just going to leave it alone. It's done absolutely amazing. It's got really good drugs. I think Keytruda, I think they've got 1 more year. And then after that, I don't know if they got one more year or a couple of more years in the patent side of things, so I'm going to check that out. They've got a lot of other products in the pipeline. They've done well in the last 10 years. They've done well for me this year, so I'm just going to hold on to them for now and just see. If I find a better opportunities that are very much discounted, I could potentially take that money. I'm up, I think, about £1,000, so I could potentially sell that. Medtronic, I'm just going to keep nibbling here and there. I really like the company. It's done quite a lot. Their product is absolutely solid. So I don't have any concerns, and I know it will bounce back at some point. So I'm not worried about it right now. 29% discounted move. Okay. Next one is the only consumer discretionary company that I own in this portfolio, and that's Home Depot. I really like the business. It's done well in terms of dividend side of things. Total return the last 10 years, you're looking about 431%. Like I said, that does not tell us what's going to happen in the future, but it gives you an idea at least. So 30% premium right now, very expensive. So I'm not touching, I'm not adding to it. I'm just going to leave it alone and see what happens. The next one is one of my biggest sectors, if you like, and that is the industrials. I've got 4 companies, ADP, I've got Cummins, I've got UPS, as well as UNP. All 4 companies are absolutely wonderful businesses. I want to hold on to them for a while. UPS is the only one that's down. I will be buying a bit more UPS as basically if it comes back down again. I'm down almost 900, if not £1,000 right now. So I'm just going to add a little bit because this is one of the companies that are now down so much, but I know for sure if the economy starts picking up, things start like changing, then definitely this is one of the companies that will benefit from people ordering stuff and whatever. So they have an absolutely nice dividend. As you can see, they've done well in the last 5-10 years and so on, and fairly valued is still. So I'm going to start, maybe I'm going to keep buying one share here and there. UNP, I would love to add a few more shares of this company. I would love to get maybe to 30-40 shares of this business, but it seems very expensive right now, so I'm going to leave it alone. In terms of business side of it, it's done really well. Cummins, by the way, is done absolutely amazing. I think I'm up about £1,000. I'll share that with you at the end. But yeah, so this is really wonderful business. It's one of those companies. This shows you when it comes to dividend growth companies that are under the radar. When I talk about this and people don't actually believe me, but this is one of the companies that no one understands their business. No one knows they exist. Okay, and they have such an old business. They basically trying to kind of innovate and get away from that old engine kind of thing, the power supplies and all of that stuff, to a newer, more renewable energy and so on. Then no one actually talks about them, but they are up so much, 72% in the last 5 years and 154%, and they're growing that dividend. I think they've got like 5-year growth rate of like 7%, if not higher. So I really like the industrials. Now the next one is the only oil company that I own, and that's Exxon, just a new addition. I'm gonna hold on to it for now because it's gone up so much. If it goes below 100, I'll probably buy more. Next is the my material sector. So the materials is Rio Tinto, ADP, not ADP, Air Products and Chemicals, and all three companies have done absolutely amazing in the last few years. If you look at even Rio Tinto, 161% in terms of total return, which is quite nice. So they've done really well, and I'm going to hold on to them. These two now are actually coming back down to earth, so I'm definitely adding to all 3 of them in the coming months, inshallah, and I'll let you know. Again, growth side of it is actually not huge, especially for Rio Tinto, but that can easily change. If China picks up again and the iron ore prices go up, this company will benefit a lot. So when iron ore prices come down, this company loses a lot, and so on. But right now I'm just gonna keep adding to them, inshallah, moving forward. Next section is financials. Who thought I would have that many financials? Okay, that is S&P Global, MSCI, Visa, and MasterCard. All 4 of the companies, I really like them. The only one I want to buy a bit more is, and I'm still buying, is MSCI, as I feel like it's undervalued at the moment. And yeah, the other 3, I really like their businesses. I'm up quite a bit basically for an S&P Global and Visa. MasterCard is down quite a bit, but I think I'm gonna add a bit more to this, and once I've actually got maxed this one here, I will probably start buying a bit more on MasterCard as well. But I really like the business model for MasterCard. It's a wonderful business. Look at that, 566% of basically total return in the last 10 years. Look at this one here, MSCI, 1185%. Really absolutely amazing. And just just to check the last 5 years. If you had these businesses basically on your portfolio last 5 years, you basically, that's what you would be up. But look at this, the difference. Visa only 69% in comparison 111% of MSCI. So it will be interesting to see how basically what the next 5 to 10 years show. But these are my now becoming one of my foundational kind of stocks. And again, they are very high growth businesses, especially these two here. Okay, they trade like these guys here. So when I talk about basically high growth companies, I'm talking about these companies as well as this and some of the pharmaceutical companies. So yeah, so like I've always said to you guys, you've got to have a balanced portfolio. Okay, we'll finish off and then we'll have a chat about the rest. Right, so the final two is basically my only retail own in this portfolio, and I am definitely adding to this one as we go along because I really like the dividends. That's the only reason it's there. It's not the price appreciation, although in the last 10 years it had 122% total return, which is absolutely wonderful. Okay, and 14% in the last 5 years, which is not great. That's just price only, but this is the including dividends. So for that reason it's in there. And the final Invesco Dow Jones Islamic, this is the only ETF I own right now, and that's it. So the moral of this story is it's a huge portfolio to manage. I'm happy to manage this. I've got some high growth companies, okay, and I'll show you that. Okay, I've got companies that have done well and will continue to do well. Companies that are, by the way, they're very cyclical. Again, companies that are not cyclical, but they are consumer stable side of things, because drugs that we need all the time, God forbid, and products that we buy all the time, these are the companies that provide that. And then we have the oil companies that will also fluctuate depending on what the economy is doing and how oil prices are, as well as some of the Rio Tintos and whatever that materials that, depending on if the overall markets are doing well, then they seem to do well. Now I have 1, 2, 3, 4, 5, 6, 7, 8, 9 sectors out of the 11 sectors of the S&P 500. So I feel like this portfolio is very much balanced. There are some companies, every single company here has a reason why it's there, and I'm going to continue dollar cost averaging into these companies for at least the next 5 to 10 years. I'm not going to basically, of course I might sell the odd ones here and there if my thesis change, but my goal is, InshaAllah, to build a portfolio big enough for me to live off in maybe 5-10 years from now on. Not 10 years, 15-20 years from now on, InshaAllah. And I'm going to continue doing that, and I'm going to keep sharing this with you as long as you guys want me to share, InshaAllah. The other thing I want to say is, this is just my portfolio, of course, and please always do your research. Okay, don't just depend on what I'm doing here. Of course you can get some ideas. That was the whole purpose of starting this thing, was just to give people ideas, because when I first started, wallahi al-alim, there was nobody out there that was doing any Sharia compliant things, and there were other YouTubers that I was watching who were talking about all sorts of stocks. Then whenever I do a bit more research, I find out they're not good investment, or they have nothing to do with Sharia compliance. So it's a bit confusing. So starting this, at least you have a starting point. Then you can go away and do your own research. And I hope that's what you're doing. And I hope you're not just copying this as it is. Of course, I'm going to continue sharing this. I'm going to continue making mistakes. But inshallah, whatever I do, I will always share with you guys, inshallah. So what I'm planning to do is I'm going to show you, we're talking about dividends. So I'm going to show you next video a portfolio of stocks that if you bought now, I'll explain in that video, but it's really interesting. Like, I've been putting together that video for quite a few days now, so inshallah I'll share that with you guys. Like I always say to you guys, it takes a lot of time and effort to put these videos together, to share my journey and so on. So please like the videos if you can. Okay, so these are just, I'm going to quickly scroll down and you can just pause the video. Okay, and now the video is already 20+ minutes, so but you can just pause the video just to see where I am right now. So it's starting from air product and chemicals. Okay, you can see every single one of the companies I own, majority of them are up. This one is down, it's about 1% down. Mastercard is about 4% down, which is not a lot at all. This one's been down for quite some time, 8%. Medtronic has been down 8%. That's why I want to buy a bit more, inshallah, moving forward. Like I said, Merck, a pharmaceutical company, I'm up £1,200. Okay, £1,100, almost £1,200, which is really quite nice. MSCI is again new addition, but it's down about 11%, so I will be buying more of that. Procter & Gamble, look at that, is about 18% up, plus the dividends is really nice. 8% down, 9% down when it comes to this one. my leader right now, the company that has actually taken over from all the other companies, Qualcomm, of almost £6,000. Okay, and then yeah, this one is down about £1,000. I thought it was actually more than that, so £1,000 down. And then basically UPS is down about £800. The rest of them are up, and overall, you can just pause the video whenever you want, but look at overall right now, about 12% up, invested about 91%. But that's not the money I put in. That includes 91%, including the price, like the price gains from the stocks that I've sold, as well as the dividends. So my actual investments generally is, this is how much I actually point into this portfolio, just £81,000. That's the money that I actually deposited. When I first started the account, I actually wanted to test it, how quickly I can withdraw that money, so I did that at the time. But look at this. Okay, so £81,000 investment, and this is where we are right now. The rest of it comes from price appreciation, that basically unrealized gains, which is about £11,000, and another £10,000 from basically investment that I've sold or dividends that I've received. So inshallah, I'll continue sharing this with you guys. I hope you're enjoying the content. Please, if you are, join us on the Patreon account, where it genuinely costs you 15p per day, where you can get a lot out of. Try it for 1 month. If it doesn't work, of course, then do what you need to do, inshallah. And of course, like the video if you can't do any of that. Have a wonderful day. Assalamu alaikum. And so apologies for making the video too long. Assalamu alaikum. Bye.